So what is a balance sheet and why is it important, especially in a business context? Well, a balance sheet is a form of financial statement, and it's one of the most commonly used financial statements in business. However, it can be also used for personal finance, but generally used for business. And what a balance sheet does is it reports the assets, liabilities, and shareholder equity of a business. So basically what the business owns or has possession of, what the business owes as liabilities, and what the business has as contributions from owners or retained earnings, which is the shareholders' equity section. And with the balance sheet, it's a snapshot of a single day. So it's not tracking these things over a period of time. It's typically just taken at the end of a financial period. That might be a month or a quarter or an annual period, tax year, fiscal year, whatever. But it's just looking at one single day for those categories: assets, liabilities, and shareholders' equity. And now the reason it's called a balance sheet is because it should balance. What you own should be represented by what you owe or what's been contributed to the company. So I'm going to go over an example here, but that is why it's called a balance sheet, and I'll show you when I cover the example. But now why it's important for a business. It can be important for financial reporting, especially for publicly traded companies. It can be very important to use when you're applying for a business loan. It's important just to see the state of your business from that perspective of assets and liabilities. It's important because it shows where you're at and how you got there. And it's also important for checking liquidity to see maybe if a business has too much of their money tied up in assets that are not very easy to convert to cash and use cash for, covering regular expenses. And it also shows the net worth of the company. So I'm just going to go over a brief demonstration of a very simplified balance sheet just so you can see what that looks like. Okay, so just a quick look here at a simplified balance sheet, which again is a financial statement that shows a breakdown of a business's assets, liabilities, and shareholder equity on a given date. Again, typically that's the end of the month, end of a quarter, end of a fiscal year, end of a calendar year. Now in this example, I'm using just a pizzeria as a business example. So you want to start by having the name of the business, followed by the name of the financial statement, which again in this case is balance sheet, followed by the date in which you're looking at these assets, liabilities, and creating the financial statement based on. So again, this is just a snapshot of one single day. So once you have that, you can look at the first section and start filling that out, which is going to be the assets of the business. So those are items that the business owns or has possession of. Some common assets would be cash. So maybe that's physical cash on hand or money in a checking or savings account. Inventory. In this case, maybe the pizzeria has some food inventory, some material supplies inventory. And then maybe they have some assets in the form of equipment, especially in a restaurant. Maybe they have some expensive industrial restaurant equipment like ovens or refrigerators or whatever that are worth something. But you want to make that itemized list of all the assets of the business and then figure out their current values. Once you do that, you can add up the total values of all the assets. The next step would be to list the liabilities. So this would be items that the business is owing, financial obligations and debts. So some common examples would be like a line of credit. Maybe this business has borrowed $4,000 on a line of credit or a credit card that they're owing. Maybe they were issued a business loan to purchase some of their kitchen equipment and they're currently owing $12,000 remaining on that business loan. And then maybe they received their utilities bill at the start of the month and they're still owing, $700 in this case for some of their utilities. So those would be some common examples of liabilities. And you want to do the same thing where you make this itemized list and then add them up. And again, when you're writing this, most businesses are going to have more detail than this. There's maybe going to be like short-term liabilities and long-term liabilities, but this is just to give you an idea of what it could look like. So once you have total assets and total liabilities, the next section would be shareholders' equity. And this is how it becomes balanced, as the title suggests, balance sheet. You want the total assets to equal total liabilities plus shareholder equity. So basically what that means is you want to see what the business owns or has possession of, and then you kind of want to explain how it got to that point. Were those assets funded by borrowing? Or were they funded by equity from shareholders, owners, contributed capital, or retained earnings from past years? So shareholders' equity could be things like common stock. Maybe people purchased shares in the company, or maybe the owners of the company put in some money to get it started. That could be retained earnings, meaning net income from past periods has stuck in the company and has helped to pay for things like inventory. So once you've made an itemized list of all the shareholders' equity, you can add that up. And then lastly, you add up total liabilities plus shareholder equity, and that should equal assets, because again, assets are what the business has possession of or owns. And then from liabilities and shareholders' equity, those two categories should explain and equal assets, explaining whether those assets were funded by borrowing, from debt, or from shareholder contribution, owner contribution, or retained earnings from past periods. So hopefully that was helpful, even though it was a simplified explanation. If you enjoyed the video, please click like. If you'd like to check out my YouTube channel, I've got currently over 140 videos covering business management and business startup topics. And if you have a question about one of those topics, feel free to just leave a comment in the comment section below, and I will address it there or make a new video on it.